Okay, good evening, everyone. Hopefully you can see and hear us okay. We've got a few more people logging in, so hopefully they'll be with us in a couple of moments. Thank you very much to everyone who is here tonight for joining us. My name's Ollie, and I look after some of the marketing and promotional work for Simon and the guys at Loan Market. I'm also currently in the market myself for a property, so I probably sit in the same seat as many of our viewers tonight, trying to get a bit of information for myself and trying to navigate this pretty intense 2020 that we're all going through at the moment. So hopefully I'll learn a few more things as well, as I have the last couple of webinars I've done with Simon and the guys. So tonight we're going to focus on the property purchasing life cycle and what this specifically means for the Christchurch market. We'll get perspectives from three professionals who will focus on mortgages and loans, real estate and open homes, and of course the legal aspects of buying a property. So joining me tonight is Simon.maule. Most of you probably already know Simon, and he's worked in the banking and financial services for 20 years and provides a wealth of knowledge and experience to many clients across Christchurch and New Zealand. Being local to the region, he's able to provide relevant and up-to-date information for his clients who actually want to buy here. Simon and his team have seen firsthand how difficult and frustrating the process of borrowing can be when clients have to deal with the banks directly on their own. That's why he places great importance on client satisfaction and outcome. Simon is dedicated to ensuring clients understand the market and opportunities that are available, placing him as the perfect guest tonight to talk about key financial advice. So appreciate you being here again with us, Simon.
My pleasure, Ollie. Look forward to giving some information out and having a good chat with our audience.
Excellent. Janna Robinson also joins us. Janna leads the 17-member strong team over at Saunders, Robinson Brown. She has 15 years legal experience, 8 of which are within the Christchurch property market. Janna advises on a wide range of property matters, including residential property. She has particular experience liaising with banks, brokers, and obtaining funding for property purchases. The property team which Janna looks after at SRB are experienced in all aspects of residential property and have worked with first home buyers and their families for many years to provide practical solutions and focused advice. I really appreciate your time tonight, Janna. Thanks for joining us.
Hi, Ollie. No, all good. Looking forward to it.
Good stuff. And we also have Richard.withy with us tonight as well. Richard joined us a couple of weeks ago for our last webinar. And I think a few of you probably know him as well, but he's a guy very approachable in his nature, shows through to his clients what he is able to achieve for them, and a task he'll spare no effort to deliver. Over the past 16 years, Richard's results for his clients have been outstanding and spoken for themselves. And really during this global health crisis we're going through, that's not slowed down as far as I've learned this evening already. He's also been at the top of Ray White's sales elite list and is known for his drive to succeed, client expectations, deliver results, and the type of customer service that people deserve when selling their largest asset. Richard's economic knowledge is what sets him apart and provides the highest value for his vendors. He believes his clients should be informed at every step of the process, hence why he jumped at the opportunity to join us tonight. So thanks for being here again, Richard. Appreciate it.
Awesome. Thanks, Ollie. Pleasure.
Right, so what I'm going to do tonight is start with this slide. Basically, what we want to do is try and get a bit of an update from the professionals on the ground and get a bit of an idea of the viewer situation, what potential clients and customers are going through. And really, this is an opportunity for our current viewers to pick the brains of 3 professionals, which rarely happens. To get these 3 people in a room together is quite a treat. So I really encourage everyone as we go through tonight's webinar to ask as many questions as you can, and we'll see what we can achieve. But Simon, I think it's probably best to start with you here. Can you walk us through what we're looking at and what this kind of means for tonight and the current market situation in Christchurch?
Yeah, absolutely. So I think if you've been in Christchurch or had a bit of insight into the Christchurch property market over the last 4 or 5 years, the common theme that we've probably had is we've lagged behind the increase in capital gain than the majority of other regions around New Zealand over the last few years. We had a rise after the earthquakes due to a shortage of stock. and then it's plateaued with only small gains and capital gain. And as we entered the end of 2019, started 20, there was quite a lot of optimism that this year we would see Christchurch property actually take off a bit more and do a bit of catching up with the rest of the regions around New Zealand. And what we've seen, if we look at, I mean, this covers the whole of New Zealand, and it's the median price changes, so it's different to an average. And I'm not going to run a maths lesson on what a median and an average and a mean is, but you can Google that. But if we look at the graphs, all the regions, if we look at March, as we entered COVID, and we hadn't gone through COVID, it was still new, everywhere was up. Those green arrows are up. So the property prices compared to the same 12 months prior, house prices had increased based on the median price. Now, Christchurch was up 6.8%. We then sort of get through COVID and we get all these doomsayers saying, look, property prices are going to drop 10% at least. Well, June's beyond COVID. Most people back working, level 1, things are open. And we look at Christchurch and that's up 5.4% compared to the same 12 months prior comparatively. And again, looking at all the other green arrows just very quickly, they're all up as well. So the quick snapshot is property prices have increased and they appear to be increasing. And I know with Richard, we had a quick chat offline before about the open home activity. Maybe you want to touch on that, Richard, about just sort of what you're seeing on the ground there, because I think we've got a supply and demand issue at play.
Yeah, thanks, Simon. And it's definitely, I think any buyers that have been out there visiting open homes at the moment are probably seeing that and experiencing that through their property hunt. It is a market that I guess we're finding is punctuated by a lack of supply. There's just not a lot of new listings coming to the market. The demand is outweighing or outstripping supply. And I think you touched on it beautifully, Simon, that we felt at the start of this year, Canterbury, Christchurch were really going to come in maybe to a bit of catch up or a bit of a boom time in our market. And that's shown on the March graph there, up 6.8%. But even in May and June now, post-COVID, we are also still tracking upward month on month and annually. So the interesting thing is, post-COVID, the market hasn't slowed as many predicted. The numbers that we're experiencing at open homes in many cases, not all, but in many, are just phenomenal. You know, we had one with 90 over the weekend in Linwood. We had another one from one of our other agents, over 100 over the weekend. So to get 30 or 40 at an open home in half an hour is not that uncommon right now. That's probably the busiest I've seen it in my time in real estate, probably since 06, 07, and that real boom market. So look, that's got pros and cons as a buyer as well, and I'm sure we'll touch on those tonight, but it's very active. It's very
Absolutely, yeah. Janna, is this the same for your team as well from a legal perspective? Since the lockdown, have things kept up? Is it busy for you guys?
Yeah, it is. I keep telling my team that things will quieten down. The media wants, to portray this situation that the house prices or the market's going to drop. We don't know what will happen, but we do know, my team is running at full capacity. They're really busy. We're seeing lots of activity, people wanting to buy houses a lot at deadline sale and auction, so quick turnaround for us. But yeah, definitely lots of activity. We've not seen a slowdown at all. It's been going great guns since lockdown finished. And reiterating what Simon and Richard said, we had a really busy summer. So yeah, there's definitely lots going on.
Fantastic. Thanks, guys. I think that's probably a good point for us to go on to this next slide. Johnny, you just touched on a point there about media, which I think is really quite important to talk about. It's usually all doom and gloom in media, and there's a lot of talk about property and obviously recessions and all this sort of stuff. Simon, you've taken us through this graph before, and I really think it's quite valuable to have a reminder of what it's about. Can you just talk to what we're looking at here and why that's important right now?
Yeah, absolutely. So, often we get asked, is it a good time to buy a property right now? And it's really, really difficult for anyone, even the best economists in the country to say whether now is the perfect time to buy a property. It's impossible to really predict the perfect time. There's an old adage that you should buy real estate and wait. In other words, if you're buying a property and you're going to hold it long term, history has told us, and it's graphically shown here, that properties will increase in value. The biggest risk you can face is where you buy a property where you've got some concerns that you're worried that you might not be able to retain the property because you're worried about your job security, or you know of something that is on the horizon that could have an impact. So my advice here is just don't buy until that time has passed. Because if you buy and have to sell quickly, you can get caught out where you will lose money potentially if there's a dip in the market. But if you hold long term, 6, 7, 8 years, maybe 10, history has told us that you'll come out and you would have made money on the transaction. So to bring that to life, if we look at some key points in this graph, 1992, the New Zealand median house price was sitting around 100,000. And if we move, say, 12 years along the line to the next green arrow, 2004, house prices are above 200, say call that 240, 250. So they're more than doubled in that time frame. We then move from 2004, add another 12 years onto that to 2016, and they've moved from around 240 to 500,000, so just doubled and a touch more. So if we say, look, what's the historical sort of pattern of property in New Zealand? Is it a good investment? This graph says yes, but hold it long term and you'll get some really good gains out of that. So really difficult to say when the right time is, but if you get in there and hold, history has told us it's a good thing to do. There's an area there in that graph where there's a circle, a blue circle, about 2009. That was the global financial crisis, and there was all sorts of wild predictions that property prices could drop 30%. In New Zealand, they dropped about 8%. So again, we had this immediate panic about the implosion of the property market, and then the realities of normal behaviour that people got into, and the insulation of the market in New Zealand, because we've got so much invested in it, that everyone's got a vested interest in trying to maintain, or not to have massive reductions in values. So, but if you bought a property in 2008, perhaps, and then you lost your job or something came up and you had to sell in 2009 or 10, you would have lost money, because that graph point out that it's dipped, it's dropped away. But if you bought that property in 2008 and your property value dipped 10% perhaps, and held on to it and sold it in 2015, you've still made money. So again, it's important to make sure you've got confidence in being able to hold your property, because long term it's shown to be a great investment.
Fantastic, thank you for that. I think this is probably a good time for us to run a poll here. And what I want to do with this is just get a bit of an idea of who we've got with us tonight, essentially. So there's 2 questions there. Please select which best describes your current position. So anyone who answers this is anonymous. We just want to get an idea of who's with us tonight, and perhaps we can look at speaking to that as we go. So you guys should have the poll up on your screen. If you can give it a go and let us know where you're at with things. The other question, do you have a financial or property plan for 2020? So that's just us looking to see if people are just curious, or that they do actually have something planned for this very emotional year that we're all going through at the moment. So you're coming through. So at the moment, we're looking at about 75% first home buyers. A couple of second home buyers are with us tonight, and mixed bag between a financial or property plan. There's actually 43% saying no, 20% I'm working on it. All right, so a couple more to come through and then we'll release the results. So I think it's quite surprising, actually. Simon, do you see this often in terms of having a financial plan, especially when there's such a significant crisis like this happening? Do your clients already have something in place, or are they coming to you relying on you to kind of help them put that in place before they make their move?
It's an interesting, financial plan's an interesting word, because there are financial planners, and that is their title, if you like. A financial planner typically here in New Zealand is someone that is about investment advice, someone that might tell you what to do with your money to get a return on it. As a mortgage advisor, we don't give investment advice in that purest sense, but what we do look at is what you can afford to borrow, what your appetite for mortgage repayments is, and make sure that we're providing the right loan structure, right products, and putting you with the right lender, and giving you some advice along the way around payments and all sorts of other things to make sure you're fully informed and you understand what you're entering into. And some of the time it's preconditioning. It's about getting your bank account conduct. It's about limiting your spending. It's about getting things sorted out before you maybe look at applying for a loan, because at the present time, the banks are being very, very selective as to who they lend to. So it's a bit of a contradiction at the moment, the market. We've got lots and lots of buyers who are out there, really low interest rates. That's all sort of quite go stuff. But on the other hand, the banks are making it very challenging for people to get money, and they're picking holes in most loan applications, looking for some sort of reason to say, not sure. So the stronger and the more informed we are around what sort of things the bank's looking for when you apply, that's probably the key part of the planning side, particularly if you're a first home buyer.
Yeah, absolutely. I think actually we've got a few questions that came through this week that touch on that. So what I'm going to do, I'm just going to close down this poll. Going to stop sharing, and I think it's probably a good time for us to get into these questions. So thank you to everyone who has sent through the questions. We've got quite a lot, probably too many to get through tonight. So what we'll do is we'll try and chase these up next week and send out, whether it's an email or an article, where we'll get the guys to give their responses, and then at least everyone does get an answer to their questions, and obviously you can reach out to them as well. As I said at the beginning, I really encourage everyone to get on that Q&A. It's a pretty rare opportunity that you have these three people together, and we can bounce some discussions off each other and have a really open chat tonight. So please do send it through. If you're nervous about your name being shown, you can choose to be anonymous. So don't worry, no judgments here. So yeah, let's get into it. Janna, I want to start with you actually. The first question that came through a couple of weeks ago now. I have a mortgage advisor, Simon, actually. When should I consider engaging a lawyer now, or should I have already done that before speaking to Simon? So I guess the question here is, when do we start speaking to certain individuals?
Yeah, I think it's great that you want to get organised, and the earlier you can be organised, the better. You can talk to a lawyer at any point. You don't need to have finance approval, and you don't necessarily need to have spoken with Simon first. It's a good idea to get an idea of what you're eligible to borrow if you need finance. So, I would say before you get searching for a property, figure out what your limit is, whether there's any cap on you with Home Start, and I would get your mortgage broker sorted. So if you've got Simon in place, and then your application done, and then I would talk to a lawyer as possible. We have anti-money requirements we have to comply with, which basically the sooner you get that organised and set up as a client, and the sooner you form a relationship with a lawyer, the easier it will be.
Fantastic, thank you. Okay, so next question here is for Simon. It's probably a very common question, definitely a first home buyer one. How much deposit do I need to buy my first home right now?
All right, well, the minimum deposit is 5%, which is not a lot. Typically you need at least 10, but there is a product that we can supply. It's called the First Home Loan, and it's supported by the government, and you need 5% deposit for that. But it comes with a number of other conditions. You need to have been in your job for at least a year. You need to have minimal other external debt. You need to obviously live in the house you're purchasing, which in most cases our first home buyers are buying their own home, and you need to purchase within our regional house price cap. So if we talk about Christchurch, that's $500,000 for an existing home, or $550,000 for a new build. So the minimum is 5%, but a lot of clients, and also there's another piece of criteria. If your income as an individual, if you're applying by yourself, is below $85,000, it's fine, or a couple $130,000. But if you earn more than that, then you don't meet that criteria. So then that 5% deposit requirement drops away, and then the majority of clients we're looking at as a first home buyer generally look to get to 10% as a minimum. The advantage of getting a 20% deposit, you hear a lot of stories in the media that you have to have a 20% deposit. That's not correct. We do a lot of loans with just 10% deposit. The advantage of getting 20% deposit is you get better interest rates, no fees, and the banks generally like that, so they make the policy in qualifying a little bit easier than if you don't have 20%. So I'd initially, for most of our viewers, be looking, say, get to 10% deposit, but if you meet those other key criteria that I touched on very briefly there, then 5% could be an option for you. And just to finish off on that deposit question, how do you build up your deposit? It's a common question. KiwiSaver, you just need to have been in KiwiSaver for 3 years to withdraw it. Doesn't matter if you're earning $500,000 a year, you can still use your KiwiSaver for your first home. There's a Home Start grant, which is a free subsidy provided by the government, but again, it's capped on income and a few other pieces of criteria. The majority of clients still qualify for that. It's $1,000 per year. For each year you've contributed to KiwiSaver. So for an individual, 5,000 perhaps. For a couple, that's 10. And then of course the savings that you may have built up, or maybe some support from family, a small gift or some help. And all of a sudden, getting $40,000, $45,000, $50,000 when you've got 2 KiwiSavers Home Start grant and a bit of savings, it actually is really realistic. And with interest rates being so low, the repayments are probably going to be less than what you would have to pay for a rental property if it was just you as a couple. So it's all pretty good stuff.
Yeah, I think you've just given me personally quite a lot to think about there in terms of how much money I actually might have available for my first home. If we can get it up to 20%, that sounds pretty good. So, Richard, this comes from a seller, from what I can tell. It's a good question, actually, off the back of the update that you gave earlier. So how can I prepare for open homes and get the best outcome from one? So, yeah, I guess from your perspective as a seller, like, you're getting people through. So is there anything else that these people can do right now with the current situation?
I think, again, it comes back to basics. If we're looking at our house being opened, it's not generally the way most of us live every day. I'll probably say this, having gone through it myself, selling a few years ago, our own home. It's not always that enjoyable, having swathes of people run through our house every weekend, getting ready for it, keeping it well presented. But the biggest thing is presentation. The first impression, you don't get a second chance to make a first impression. So, look at your entranceway, reducing, and I'm not going to use sometimes negatively framed words, but less is more inside the house and sometimes outside. So things that we live with every day, just look at it and say, do I need that there? Less is more in terms of internal furniture. Buyers want to see space. And at the moment, when we've got properties that we might have, like most have 10 groups at, now these are groups. If you've got 20 or 30 groups inside half an hour inside your home, space is really key. So take away some of the things that are essential pieces of furniture. Just look at the first impression, presentation. You need to do touch-ups with paint, etc. That can be really, really valuable in the lead up to putting it to the market, because people take away the impression of the overall property. That's also something we can help out with, or whoever you may. Janna said really well before that having a relationship with your solicitor or broker as early as possible is really key to getting a good result and making the right decisions. Same thing for us. Many of our clients, we've known them for 6 months, a year. We work into it for 2 or 3 months and get their house set for sale, preparing it. Sometimes we have to put it on the market that day, but we might go around and say, hey, work on this before the first open home. Take this out. Should we touch up paint here, or that type of thing? So those are the type of things. Good marketing, good representation in terms of a good agent that you trust, that's got your best interests at heart. And they'll be able to help you with that presentation and what you need to do to maximise impact and impression.
Great stuff. Thank you for that. Janna, we've got a question here regarding costs and fees. This came through last week, but we've also just had one come up this evening as well. So maybe you could answer them both in one go. How much does a lawyer typically cost me during the buying of my first home? And someone else has also asked tonight, very similar question. In terms of that 10 deposit that Simon spoke to earlier, In terms of us saving for that initial spend, the deposit and your fees, is there any considerations? Are there going to be any surprises? What's our kind of expectations here as buyers?
Yeah, so the way that we work, and I think you'll find most lawyers work, is that they're pretty upfront about what their costs are for conveyancing. We provide estimates based on the type of property, whether there's a mortgage, and whether they're a first home buyer. So we have a standard estimate for a purchase, which is just a normal purchase. It's not a unit title. That's a little bit more complicated. And our fees are $1,500 to $2,000 plus GIST and disbursements. When you look at all the costs, such as registration fees for LINs, which is how you register the property into your name, search fees, LIM fees, which is charged by the council, you're looking at anywhere between $2,500 and $3,000. You shouldn't get any surprises. As I said, it's a law society. Well, it's a law society requirement to provide estimates and to provide information on fees. And we certainly talk to clients during the process if there's any issues that arise that would result in an increase in those estimates. So yeah, you should have that information up front, and you can ring any lawyer and ask them that question, and they should tell you straight away.
Yeah. Simon, is just off the back of that, is that something that typically comes up in conversation when people are approaching you in terms of, lawyer fees and extra fees, and is that part of a deposit?
It's not part of the deposit. So when we talk about deposit, we're simply talking about the client's contribution to the purchase price. So if someone was buying a house for $400,000 and they had 10% deposit, they're putting in $40,000. So with things like perhaps moving companies, they might use a moving company, they might need to get a registered valuation, they might want to get a building inspection done to check the property out, and obviously they've got to get a lawyer to represent them. They're probably the key costs that we tend to find during a transaction. Yeah, when you look at all those, rather than just scrape in with your 10% deposit, it is good to have a few $1,000s floating around during this time to be able to cover those costs. In many circumstances, not all, we are able to get a bit of cash from the bank that delivers the loan to help give back to the client, who can then use that to cover some of those costs. It's often been called a legal fee payment or a professional fees payment. It's a bit of a misconception. Essentially, the person, if they get a couple of $1,000s as a thank you from the bank saying, hey, thanks for choosing us, here's some money as a payment to you in advance of you being a loyal client of ours, really the client can spend that on anything they like. But of course, they will be given a bill from their lawyer. They will be having some other costs along the way, and that money is really useful for covering those things. At the current time, coming out of COVID, I touched on before, the banks are getting really tight with their credit policy, so they're making it a bit tougher for us to actually get loan approvals. They're also then taking away some of the goodies that they typically throw around as well. So they're less inclined to give some of those cashbacks and things, but we do know the banks that are doing it. We do know where to find that if the client qualifies. But I think it's important to make sure that the buyer, or my client, or the buyer, whoever it is, has some extra funds to support those transactions themselves.
Sure thing. All right, thank you for adding to that. Richard, we had a bit of a scenario come through on one of the questions here. So someone was at an open home last week, and when they were viewing, they spoke to the salesperson who advised on an asking price that was 70k higher than the region's average of what they'd researched themselves. So I guess the question here is, what do they trust in terms of what they should be putting down for an offer? Is it you, or is it what they're researching online?
It's a really tricky one, and in this type of market, it's the hardest thing, and what I've learned over my time in real estate, is there's just no formula to what a property is actually worth. Online research, if you look at some of the online algorithms that spit out what a property's value may be, and sometimes they have ranges. I know Trade Me Property Insights do that, homes.co.nz. They are so far off the mark so often. You can check those two sites on the same property and sometimes they're miles apart. So they're simply mathematical formulas. They know nothing about the property. So a difficult thing to rely on those. I think probably the best thing you can do is, yes, talk to the agent. If they're helpful, knowledgeable, experienced, they should be able to give you some recent sales in the area. Those sites like homes.co.nz, Trade Me Insights, you can generally research what other houses are selling for. Where technology becomes handy is if you get that address that they sold at, you can also research all the photos of what they looked like, how they were presented, what their characteristics and features are. Not as good as walking through it, but still, as a buyer, you want to do as much research as you can. You want to take the advice of the agent, but keep in mind that I guess the reality is they're also working in the best interest of the vendor, but also have a duty of care to you as a buyer. Christchurch is a small place. My reputation and business doesn't grow unless I have happy buyers and sellers. So we're there to look after you and help you, but what it is actually worth in this market, look, the variability from one sale to the next is huge. So it's actually difficult for us to know what it will sell for down to the last dollars and cents. So we should be able to be helpful, give you the RV, recent sales that are of a similar nature. But doing that research yourself is going to give you the best opportunity, I think, to ascertain what that value is of that home in your own mind. It comes down to your own taste, likes, needs, location. It's not an easy one. I wouldn't go just relying on the real estate agent. I hate to say that, but it's probably, it's a big asset. It's a big purchase. You want to do some research. Yep. Be out in the marketplace, find out, track things that you like the look of in certain areas, and find out what they sold for. That's where we can help. We can, if someone rang me and asked what we sold last 4 properties in Beckenham for, I'd happily tell them. I could send them research, stats, facts, so they can then have that market knowledge to be able to make the right offer and a good offer when they find a house they like.
Sure. Yeah, no, I think, I'm one for checking out as many websites as I can. It's good you mentioned a couple there, so I appreciate that. We have another scenario here, actually, which it's an interesting one. I'm going to position this to Janna, and I'll read it out and see how you go. Put an offer in for a property, but there's been earthquake damage identified, putting the final cost up considerably. We were never told this during the initial stages of viewing, and it's now above the asking price what we expected. What is your advice? Do you have anything that you would talk to there?
Well, I have a load of questions for that person. It depends how far through the offer you are, whether you've confirmed, whether it's still conditional. If you are still conditional, then hopefully you've got a condition that you can either deal with that or that you can cancel if it's that serious. If there is significant damage and if you've confirmed, so you're going ahead and settling, you need to talk to EQC and you need to talk to your lawyer, because that is there can be quite a few issues with getting assignments when it goes over cap, which means it goes over the cap that EQC can pay, and then it can go into an insurance claim. So you need to make sure you're getting an assignment of the insurance claim, not just EQC. But yeah, that's quite a complicated situation, and I would probably need to ask quite a few more questions just to figure out exactly what's happened there. But it depends also what the vendor knew, what the agent knew, and if that was disclosed to you. You've said that it wasn't. It may just be that it wasn't identified. So there is a lot of properties where they've been scoped, they've been repaired, or the owners have been paid out, but then subsequent to that there has been renovations done or a building inspection, and there's significant damage that wasn't known about. So there's a raft of things that probably need to be clarified. Sorry, I can't give you more information than that.
No, it sounds like a sticky situation, and I think what I'm hearing from this is, going back to my first question for you, is when should I engage a lawyer? I think this person should have done it right at the start. So hopefully they will reach out to you after this. Probably another question for you, Janna, and maybe perhaps Richard. The agent says all EQC claims have been settled. What does this mean? I'm going to also put my hand up and say I don't know what that means either. So, Janna, can you speak to that, or Richard?
Yeah, so there's a bit of terminology there. Settled legally means that the repairs or the damage has been what's called scoped, so assessed, and settled means that they've received a payment. And whether that's what's meant by the agent using that term can be slightly different. So usually when people talk about a claim being settled, usually the work or the damage has been scoped, and then the owners or the previous owners have been paid out, or EQC has gone in and repaired it themselves and the work has been signed off. So it's usually referring to there was damage, it was identified by EQC, and then it has been dealt with. That doesn't mean that all the damage was identified originally, because as you may be aware, EQC and their assessors missed a whole lot of stuff, and it doesn't mean it was repaired properly. So yeah, it's a bit of a legal term versus what's commonly used in the market.
Richard, is that something that you've used yourself? Have you heard this before?
I think, yeah, I mean, Janna's answered it brilliantly. The reality is that it's the terminology. So I'm not saying everyone gets it right or uses it right, or sometimes understands what that may mean. But yeah, it's definitely something you want. Every agent, every property should have all the EQC documents available. So that would be scopes of works, claim numbers, sign off if work has been completed through an EQR Fletcher's program, or receipts and invoices for, I guess, a paper trail of what the history of the EQC earthquake nature of the property is. We definitely get really, really excited when we have a post-earthquake build home on the market, because we don't have any of that. It simplifies things for us and for everyone. But yeah, Christchurch, we have the joy of working through earthquake claims, the history, but that should be done by the majority of us, I believe, as agents and our owners, and providing that to you as the buyers. Hey, look, sometimes things come up that you just have to deal with and try to get the information. But with the help of your lawyer and a good agent, you should be able to piece that puzzle together and have confidence that work is done. Building inspection to check, as Janna said, that the works have been done in a professional, tradesman-like manner is really important, because there was repairs and there were repairs, and that's been in the media. So just, again, checking that your investment in such a large asset is solid is what you have to do right from the start. So have the professionals give you that advice.
Yeah, absolutely. Okay, so just in the interest of time, we're certainly getting through a few questions here, so really appreciate it, guys. I'm probably going to wrap up with a couple more, and then we'll call it there. So this one again came through yesterday, just regarding investment properties. I'll probably direct this at Simon first, and Richard, if you wanted to add on to it afterwards, feel free. But is it still a good time to be buying investment properties during the whole COVID situation? We have got a couple of second home buyers joining us tonight. So how does that look? We've talked about first home buyers and the deposits and things like KiwiSaver, first home grant, but second home buyers, investment, how is that still looking in Christchurch?
Good question. Again, I'll go back to that slide with property prices increasing over the years. I think anyone getting into buying an investment property needs to think about what's the why. Why am I buying an investment property? And there's two reasons. One is to provide cash flow, where the rental income coming in is more than the costs in holding the property. Now, if you're lucky enough to have cash in the bank, perhaps say you're a baby boomer and you've got 500,000 sitting in the bank, you're probably earning about 1% or even less than that on your investment. So therefore, perhaps someone with that situation might think, well, actually, I'll buy a property, if I hold it for 10 years and it goes up by 50, 60% in terms of its value, and in the meantime, the people are paying me $400 a week. That's a pretty good outcome for that person versus earning essentially no interest in the bank, and not sure of what that investment will look like in 5 or 10 years. So, that would answer the question from my point of view, that it's probably on an educated guess. They should probably buy an investment property. Someone else who may be more highly geared, in other words, they've got debt already, they need to have a really good, strong think about it. Can they tolerate the place being empty for a few weeks or a couple of months? So can they pay both mortgages in that situation? They need to consider the risks like we talked about earlier. But in simplest terms, it doesn't really detract at all from what we've looked at first, and that is, if you're buying a rental property and you can afford to hold it long term, you're confident with the rental market, it should turn out to be a good investment. And with interest rates being so low at present, in most cases, the rental income being received outweighs the costs in terms of the mortgage payments, which is your biggest cost when you have a rental property. I went to a property management meeting last week. Property management company is the companies that manage the tenants and look after the properties for their landlords. And their vacancy rate really low, so they've got, most of their properties are actually, they've got tenants in them. There's not much on the market for them, and the ones that are coming to market are tending to be picked up, which surprised me a little bit, because I'd sort of again heard through the media that there could be potentially a flood of Airbnb sort of type properties that were short-term overnight rentals for the tourist trade, going onto the long-term market, flooding the market, rents dropping, so much choice. I don't study that part of the market particularly closely, but from the meeting I attended last week, that didn't appear to be the case. So there seems to be a good demand for the right rental property still, and long-term it should turn out to be a good investment. Just avoid risk if you're worried about overextending yourself. Have you heard anything, Richard, around rentals at all? Any intel there?
We're definitely seeing that. One that we sold this week was one in Ireland. My seller had it for 26 years. It was his first ever investment. He's got a number of investments now. He said this week it had 3 days vacancy, so that's the type of rental you want. But 26 years, it's been a rental, really well performed for him. We had a huge amount of interest as soon as it went live on the internet, probably more so than most other homes that I've had of late. Literally, I must have had 4 emails within 20 minutes of pushing the go button on TradeMe, which was quite astounding. So we're seeing rental activity in terms of investors in the market really increase and step up, whereas probably for the past 4 or 5 years since the Reserve Bank made the LVR changes with the banks, Simon, and that loan to value ratio, you had to have more equity, 40% to buy your second home in terms of an investment. There wasn't anyone investing. Mum and dad or the normal investors were gone. Now we're seeing them come back into the market. And I think that's probably due to a couple of things. One, low interest rates. So if they've got money invested, it's not returning anything in your normal bank investment funds. But yet your property market is still returning really good returns per week. Plus you're getting the gain of that graph that Simon showed at the start of capital gains. And we're starting to see, a lot of investors return to the market. That one, the deadline sale was brought forward. It wasn't these were young investors. They are literally, I would say, under 25. That might make them feel good too. But they would be under 25, a brother and sister, and they've just got a long-term strategy, and good on them. I think it's fantastic.
Another point just quickly on that, Rich, you touched on was LVRs, and there has been a change through this COVID situation that the Reserve Bank's removed these LVR rules. Don't like using too many buzzwords here, but LVR is the loan to value ratio rule. So Richard touched on about 2013, the Reserve Bank implemented these rules that said if you buy a second property, an investment property, you must have 40% deposit. Then it moved to 35, then it moved to 30. And during this COVID situation, most banks are now allowing you to buy a rental property with 20% deposit. And so that shift in LVR has opened up the market again to those investors. It's easier to get the deposit or the equity together to buy that next property. So that's helped fuel that activity as well.
Fantastic. Thanks so much for going into detail there, guys. I think I might just have the last word on that one, actually. We, as of today, are relocating our rental, so place we're actually renting. The agent said over 20 people came into view and they had it signed off within an hour with a tenant. And we're the same case with our new property in Mount Pleasant. We went and viewed it. We were the second people in and signed it off ourselves as well pretty quick. So I guess I'm a perfect case study, right? Like, there is definitely movement out there. Things are happening. It's still looking good. With that in mind, it's almost frustrating because we've still got some really good questions coming through, but I am very conscious of the time and the fact that it's a Wednesday and people want to go and have dinner, watch Netflix, that sort of stuff. So as I said earlier, we will get to these questions and I'll round them all up, send them through to Simon, Richard and Janna, and they'll answer them, and we will email them back out to those who have registered and hopefully, get some more answers out to you guys. Let's round up tonight. Simon, can you give us a 60-second pitch on why I would use a mortgage advisor, please?
Okay, no problem. Hey, listen, I guess the key thing for a mortgage advisor is we have access to more than one lender. So you go to the bank, you sit down with your banker, it's one person with one solution. At the current time, the banks have made it tougher. They're tightening some rules. They're looking very closely at all the applications because they are still concerned about what may happen in the economy in the next 6 months or so. So the banks have started to get tough. They're also downsizing their branch footprint. Most banks have started to shut down some branches and their opening hours have regressed. So really you want options. You want someone that's an advocate for you, who knows the market, who's got access to all the lenders. And we're free most of the time, 99.9% of the time. There's no cost at all for our services. So we're going to be in your corner from the word go right through to after settlement and into the future when you need to look at your next property or you have questions on your home loan. And it's all about service and advice. That's the key part from our end.
Awesome. Richard, why would someone come to Ray White and work with yourself?
Because we love what we do. Look, I think we, for myself, I've been doing it for 16 years. It's just such an awesome role. We get to meet some great people. Is it always easy? No. Can we always get everyone exactly what they want? No. But look, we really love helping people buy and sell property. It's a great role that we get to fulfill. Last week I had a sale that, you just saw that come through. They're in a tough situation, the sellers, and have had a really tough time, and you got them a great result. The purchaser was wrapped, excited to buy, and they were just relieved to be able to move on to the next stage of life that they need to. In terms of Ray White, look, I've worked for Ray White the entire time throughout my career, and it's still a family-owned company. It's the largest Australasian company. Now, largest is not always best, but I guess what it gives us is the systems, the structure, the experience to be able to deliver the results that people need across all markets. This year's been challenging for so many of us in so many different ways, but we've been through so many different challenges across 104 years of being in operation as Ray White that, there's nothing too much new that we get thrown. Given a pandemic is maybe one of them. But yes, we still embrace our family values. We love helping people fulfill their housing needs. And for us, doing it well, giving people the service they deserve when they're buying the largest asset or selling the largest asset they own is something that we're pretty lucky to do. We love it. We're passionate about it. So if we can help in any way, we're always happy to.
Great. Thank you, Richard. Janna, why Saunders, Robinson, Brown? Why would I speak to a lawyer and come to you guys specifically?
Yeah, well, you can see all the information on the slide there, but we have a team that are dedicated and work solely in residential property. All the team members are fantastic. They work really hard to help our clients. They talk them through the process. We're just trying to make it as easy and less stressful as possible for clients. We know what we're doing. We look at the stuff every day and we know the Canterbury market really well. I have a couple of absolute guns in my team who will trawl through your EQC information and they will get to the bottom of everything. Yeah, we've got a great team and we're really good at what we do. So we're happy to help anyone, and we turn things around really quickly as well.
Fantastic. Yeah, I mean, it's a well-known brand now, I think. I've mentioned to a lot of people, a lot of my contacts in the property space, they all know of you guys. So that says something in itself, I think. So good stuff. All right. Well, thank you very much, guys, for giving us a little bit of a pitch there. I think that's always important to do. And as the viewers can see, we've got some details up. I really encourage everyone to reach out. I personally know that these guys are very friendly and easy to get along with outside of a webinar as well. So this isn't an act, they're actually like this. So do reach out, send them an email, give them a call, and you know, get talking about where you are in the journey, whether you're just starting or you're moving on to your second, third property, whatever that might be. I will be sending out the recording of this so you can relive all your favourite moments. You can share it with your family and friends, whatever you need to do. And those that have registered but weren't able to attend can also do it as well. So the power of technology, eh? It's always handy this way. So thank you guys for joining us. Simon, Richard, Janna, really appreciate your time tonight. It's been really good to get your professional opinions.
Thanks, everyone. Thanks, Ollie.
Pleasure.
Appreciate you
Thanks,
tuning.
Ollie.
Yeah, cheers. Thank you.
Great. Thanks, everyone. Have a fantastic evening.